You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. Time to talk about all things futures options. Because why? Because it's time for TWIFO This Week in Futures Options, the show with the name pretty much says it all. My name, of course, Mark Longo from the THE, optionsinsider.com, as well as from the ever-engaging network upon which so many of you are mainlining these days. Just a reminder, September coming to a close soon. If you want to get your name in the hat for the Pro Trading Crate to win it for this month, only one place you can go to do that, theoptionsinsider.com/pro. Got to be active anytime during the month. So even the last couple of days count. So if you get in there now, not only do you get access to 250 somewhere around that episodes coming at you the second you hit that button, plus, of course, all the live, plus new shows every week exclusively coming to you, plus your own podcast feed, plus you get your name in the hat to win some cool, or some might say freaking awesome stuff. I'm looking at it right now. It's pretty cool. Our studio overflowing with things just to give to you folks because we like you. The optionsinsider.com/pro is the place to go. As we go around the horn, see who's joining us here on the old CME Group hot seat. I'm pleased to welcome back on our old friend, the once future and now present Dr. Vix. Mr. Dr. Vix, welcome back to TWIFO, sir.
Mr. Dr. Vix. I like that. I'm a Mr. and a doctor.
Yes, two salutations
all
in
kinds
one.
of respect.
Two for the price of one.
I'm pretty sure I'm in a new spot. I don't think I've ever done this with you from Washington, D.C.
Oh.
So we can put a little we can put a tack on, on D.C.
I think we've done like Hong Kong. I think we've done, Singapore, a bunch of weird places. Never D.C. What's cooking in D.C., sir?
Oh, it's Parents' Weekend at George Washington University, and I'm visiting my daughter.
Oh, congratulations to you, sir.
We've been writing big checks to GW.
I was going to say, congratulations and condolences to your wallet, sir.
Yeah, I was going to, but this is the first time I've ever been on the campus. I never got to see it before she went here.
There are worse places to go to school than D.C., a fun town.
Oh, yeah. No, it's great. I see why she keeps telling us she's never coming home.
She likes herself a little bit of the old free Smithsonian. I'm sure that's what they're doing all day. the college kids, just hitting the museums for free. All right. And it's time for us listeners to dive right on into the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down everything lighting it up to the light side and to the dark side over there at CME Group this week. If you follow CME Group on Twitter, you follow us at Options on Twitter. Both of us tweeted out right before showtime, so you can see this report for yourselves. If you looked at it at a glance right now, you'd probably think it was roughly 70-30 red to green this week, mostly red outweighing that. I'm sure if we re-racked that right now with some things turning to the light side, it might be a little bit closer, maybe 65-35, maybe 60-40 out there. But as it stands, when we ran this report this morning, roughly, I'd say 70-30 red out there on the screen versus green. But Mr. Rhoads, you are our guest, so you get the pride of place. You get to determine how we start our journey this week, sir, to the light side or to the dark side.
Man, both the light. You know what? I'm going to start on the light side, but both of them are some names we've never seen.
Yeah, it's kind of interesting.
It's kind of interesting.
Mixing it up. So what did you choose? What's the official selection?
I said light side because I'm going to do that thing that you hate where I make you talk about interest rate options a little bit.
Oh, fun. I'm looking forward to that.
So that's why I started with light side.
You missed it. We got on interest rates not too long ago on the show. So you missed it. You missed your opportunity, sir. One and done. Only during Fed week are we legally allowed to talk about rates here on the show. All right, to the light side we go, listeners. I'm just joking, all you rates heads out there. I know you're out there. We get rates on the show. Probably get there again today. We shall see. But to the light side we go, and we got to kick things off in one of our frequent offenders coming in at the number 5 spot today to the light side, listeners. It is natgas up 3.27%. So natgas popping a little bit this week. We've seen it pop more, obviously, but a frothy, a bubbly, an effervescent week, especially when most things are red. About 3.25 to the upside. Nothing to sneeze at. Right above it, coming in at number 4, listeners, staying in the energy, we're going to WTI, up 3.29%. It was number 5 in the same direction last week. Again, it shows you how anemic the light side was last week. We could barely scrape together a top 5. WTI just made the list. It was up 0.62%, so that barely cuts it. But for last week, it had to do. Number 3, moving to the equities, but staying in energy. It's one of those sectors coming back on our radar. This time it's the energy sector. So getting a whole lot of energy vibes from the bottom half of the light side, I should say this week, listeners. Energy sector up 3.72%. Then number 2, we're going to the ags, in particular the softs. Back to the return of an old friend, a frequent offender that has kind of lost that distinction now. You might have to find a replacement for number 2 here, which is lumber, up 6.05%. We haven't seen lumber in our movers and shakers for months. It was the most reliable name in our movers and shakers every week for the lion's share of the pandemic period. You could argue that lumber was the most volatile asset going out there. And yet, dead trees taking a bit of a hiatus over the last few months. Coming back this week, up 6.05% for the number 2 spot. And then number 1, staying in the ags, we're going to oats, up 6.21%. It was number 1 in the other direction last week, off a little over 11%. So banger couple of weeks for oats. Unfortunately, when you crunch the numbers, about 13 contracts. So nothing to analyze really out there, but impressive movement nonetheless. Then to the dark side we go, where we have the specter of the rates looming, including number 5. We got the 30-year off nearly 3%, 2.93%. Number 4, back to the equity sectors. These things starting to make their presence felt more out there. Number 4, we have the real estate sector. So if you're wondering what's moving and shaking out there within the big indexes, we have the real estate sector coming in at number 4, off 2.94%. Number 3, this one might have to take the spot of lumber. We'll see if it keeps popping up on our radar. This is silver, off 3.53%. It was number 1 in the other direction last week, up 2.66%. So an intriguing couple of weeks for silver. Metals not known for their explosive volatility, so silver managing to deliver from those diminished expectations. Number 2, back to the rates. It is the ultra 30-year this time, off almost 3.7%. And the number 1 dark side mover this week, also our largest percentage mover this week, back to the equity sectors, this time the utilities sector. Haven't talked about this one on the show before, off 6.92%. So an intriguing week, a lot of energy, got some rates popping in there. Also have a whole bunch of equity sectors making it into our movers and shakers this week. So a lot to choose from. Mr. Rhoads, where should we begin our journey this week?
Let's go ahead and do rates fairly quickly. But the what's interesting is not only do rates, not only do we have a couple of rate markets in that top 5 of the dark side, but in reality, utilities count when you think about it, because they're so interest rate sensitive. And now that it looks like it's going to be longer for us to get a cut, not surprising to see the utilities under pressure as well. So we're not going to go talk about the utility. We're going to talk about the bonds, but a lot of what we say with the bonds can be extrapolated to the utilities as well.
All right, listeners, you want it, you asked for it. To the rates we go.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, everybody, welcome to the wonderful, the action-packed world of rates. Listeners, you know where to go to find this report for yourselves and everything else we're going to talk about on the show today. CMEgroup.com/TWIFO, TWIFO. Once you're there, to that drop down we go. We're going to pop into it, go almost to the bottom, 2 from the bottom, to interest rates, where we find, of course, the product family, then going to be U.S. rates. And then from there, we could pick our poison. We usually go to the 10-year, maybe because we have so much longer duration paper lighting up this week. Maybe we'll go 30-year, but I don't know. It kind of depends where we feel like hanging our hat this week. Mr. Rhoads, what's catching your eye in the wonderful world of rates this week?
I was looking at the skew on the 30-year and was just pulling up the skew on the 10-year just to get an idea, because you can, much like other commodities, you can get an idea as to what the market's thinking. So either of those is fine because they're both telling about the same story.
We talked 10-year not too long ago on the show, so let's mix it up. 30-year is moving and shaking, longer duration, farther out on the curve, listeners. And, no slouch itself when it comes to volume. The 30-year, a little over 1 million contracts on the tape right now, so compare that to your oats, 13 contracts, or even a frequent offender like silver, 25,000 contracts. A 30-year, no slouch out there. The 30-year, 113.16 right now, off a little over 3, about 3.13 points, or nearly 3% on the week, about 2.9%. Of course, that's just from Monday session. And actually, if you extrapolate it out to the end of the show last week, it's about the same percentage, about 2.93%. So pretty much the same to the end of our show last week. And again, that 1 million contracts, the rates play by some different rules of engagement. It's not all 0 day all the time. That would be funny, 0 day in a 30-year, slinging them. And we got some options expiring tomorrow, so we kind of have that effectively going up out there. But no, the action right now, 35% going up in the November contract out here. That did about 35% of the paper. So we're going to hang out there, listeners. And what is the volume? You might be asking in the 30-year. And, the rates complex, kind of like the metals complex, not exactly known for explosive levels of vol. You see a 4, you'll see a 7 out there. Maybe things get crazy at 10. 30-year, a little bit juicier by comparison. You're talking a 14 handle out there, 1460. Actually, a 1430 in the November contract. That's up 2.3 points. So that's a pretty big vol move for the 30-year, all things considered. The VIX moves 2.3 points. People are going to talk about it. 30-year moving 2.3 points, that's fairly impressive. Skew-wise, let's see what's popping off out there. And, it's interesting. The near-dated stuff, there's a bid to the puts, but as you go a little bit farther out, you go out to November and beyond, that bid gets a little bit more pronounced. Where we are in November right now, listeners, a week ago, these puts were 5% bid. This week, 7.2% bid. So puts catching a bid out here in the 30-year. The calls, 3.9% cheap. Last week, this week, 5.5% cheap. So we're starting to see a little bit of a modest equity or investment skew start to make its way into the 30-year, which is intriguing. And in terms of action, It's the 111 puts in November leading the dance this week with, actually, I take it back. No, it's the Dees. It's the Dees 124 is taking the catbird seat with 47,000 contracts. So almost 2x the entirety of silver in that 124 call in the December, listeners. 47,000, the big day Tuesday, 23,000, so roughly half going up on Tuesday, mostly opening there. 15,000 on Wednesday, 8,000 today, and then 400 on Monday. I love how these very active products can just turn it off on some days. Just turn it off and then right back on again. Nothing to 23,000. It's a big jump. Total of 47,000 on the week. And then right behind it, we have what looked like the number one, but we're going back to November. The November 111 puts, listeners, 36,000 of those going up this week. The big day for those, actually Wednesday, 13,000 on Wednesday, 12,000 on Monday, 6,000 on Tuesday, about 5,000 today. Looks like opening earlier in the week and then closing later on in the week. So tale of two tapes there, upside calls in December and some slightly out of the money puts there in November, dominating our tape. Mr. Rhoads, what are your thoughts on the paper we're seeing out there and the action we've seen so far in the 30-year?
Well, and it's definitely elevated. And one of the things that I wanted to, the reason I was hoping you would talk about the 30-year a bit, is the 30-year is the implied vol, the at-the-money implied vol at 14. That's about twice what you're seeing for the 10-year, but that's kind of normal. You would expect, longer dated bonds are more volatile. So it's unfortunate that the 30-year doesn't get the amount of love it did 30 years ago when it was the main trader. It's kind of shifted to the 10-year. The skew is actually more concerned about a downside move, which means the market is more concerned about higher rates as opposed to lower rates, which is really interesting when you look at like the Fed Watch tool and things like that say the next move is going to be a cut and it's not going to be for 9 months or so. You might have some people that are hedging that's not right now, and that we may see another hike. I mean, it's not showing up in the Fed Watch tool, but the option activity makes you think some people may be concerned about higher rates.
Yeah, the Fed Watch has been interesting to watch lately. Going into the most recent Fed decision, I don't think I've ever seen it as unanimous as it was. It was 99% that the Fed was going to sit on their hands. They only priced in a 1% chance of anything happening, and that was a 25 basis point raise, and obviously that didn't come to pass. So usually you see a little bit more probability of something else sprinkled in there, but this time, nope. Fed Watch completely unanimous, and you're right, not pricing in much action, but not what we're seeing out there skew-wise. Since you mentioned the 10-year, and we're hanging out in rates anyway, and I know our rates heads love it. They can't get enough rates. They wish the whole show was naught but rates. We'll do a quick sojourn into the 10-year as well. The 10-year, obviously, the more active of the two, listeners, 2.8 million contracts, so almost 3x what's going up in the 30-year. But as Russell pointed out, much more anemic, roughly 50% of the vol. The vol in the 10-year, about 7.25. So kind of a 50% discount on the vol side, which is it. That's the kind of vol I'm used to talking about in the rate space. So you start talking about 14, get into the teens in the 30-year, or you get into the 3-month SOFR, you're starting to talk meaty double digits. That kind of throws me off from a vol in rates perspective. I'm used to the quiet, the sleepier vol we're used to seeing in the rates complex, but still not a sleepy week. 2.8 million contracts, and again, 44% of that also going up in the November cycle. So we're going to hang out there. 107.75. Actually, excuse me, 107.25 is where the 10-year is hanging out right now, off about 0.25 point, or not quite 1%, about 0.8. So kind of a bit of a sleepy week on the 10-year front. In terms of vol, like we said, 7.25, gaining about 0.75 point. So that's actually a pretty juicy week from a vol perspective in the 10-year as well. I won't say percent of a percent because I know that drives some vol people crazy. In terms of skew, last week the puts 3.6% bid, kind of treading water this week, 3.7% bid this week. So kind of unched on the week. The calls 1.2% cheap last week, 2.1% cheap this week. So you're seeing the same overall skew shape as we saw in the 30-year, just much less pronounced. And some of that's to be expected. We're seeing much more anemic vol levels out here as well. But intriguing stuff. In terms of action, it was pretty much the 107 puts in November leading the dance by a country mile, listeners. 129, almost 130,000 contracts going up. So that's getting pretty close to what we see maybe in a gold. So you're talking the entirety of gold, almost, not quite, but almost, just going up in these 107 puts in the 10-year, listeners. So yeah, they're pretty active. The big day was Tuesday, 52,000 going up on Tuesday, mostly opening there. 34,000 on Wednesday, again opening. 27,000 today, and then 16,000 on Monday, slightly closing there. And then behind that, we have the 108 puts, so could be some roll-in action, even though it doesn't look like it. It looks like most days were opening on both days, with the exception of Monday. So it doesn't seem like rolls. If anything, if there was vertical action, it was opening on both legs. 123,000 of the 108 puts going up this week as well. The big day, also Tuesday, 45,000 there, 26,000 on Wednesday, 36,000 on Monday, so a heavy day on Monday, and then 15,000 today. So heavy, active all week long. And then right behind it, 105. I mean, you're talking 350 odd thousand contracts just in these three we're talking about here. That's a lot of paper. The 107 half puts about 106,000 contracts. The big day, weirdly enough, today for these 45,000 going up today, could potentially be closing. There are 73,000 contracts open on this strike. Then we have Tuesday, 26,000, 18, almost 19,000 yesterday, and 15,000 on Monday. Looks like opening primarily throughout the week. So some intriguing paper. Lest I forget it, there is some quote-unquote zero-day paper going up in terms of the 108s that expire tomorrow, listeners. These have been pretty active all week long, but a lot going up today. 40,000 going up today, all opening because there's only 4,600. So there you go. Everyone who wants zero DTE, we just did that poll. We didn't really include the rates. We said futures options, so that implies rates, but we didn't really specifically call out the rates complex. Yet there you go, Mr. Rhoads, 108 calls with a day to go in the 10-year. Do we need zero-day rates products, sir?
I think we do. You know, I'm all about more and more short-dated stuff to trade and be able to pinpoint things. I don't necessarily. And this is where I think we'd lose a lot of people. If you're going to do it, you want to do it in the 30-year and not the 10-year. And the reason I say that is both of those have kind of elevated implied vol right now. The 10 years, 30-day at the money implied vol is a little over 7. The 30 years is a little over 14. The long-term averages are 5 and 10 respectively. That long-term average of 5 for the 10-year, I just don't think that lends itself toward daily option trading. But the long-term average for the 10-year, it's 10, and the max is actually, it's gotten up as high as 33 back in 2009. The 10-year, the highest it's ever gotten, it's 14, which is about where the 30-year is right now. So I think if you were going to do daily options, if the folks at CME were going to do it, I think leaning toward the 30-year just because of the excess volatility, even though that's not their most actively traded market, would make an awful lot of sense.
Isn't that hilarious? Just what an oxymoron that is. Zero-day options on the 30-year. But that's the world we're all living in. That's the world we're all living in, Mr. Rhoads. If you had told me that years ago, I would have laughed at you and called you a madman. Yet that's where we all are. Even though I probably would have been right. You are a bit of a madman. But that's a conversation.
I have my moments.
That's a conversation for another day. All right. Are you sated on the rates, or do you need more?
I'm sated on the rates, and I hope 3 or 4 other people that cared about them are too.
There are some rates heads. We get some rates love here on the show all the time. So don't worry. You're not alone out there. All right. Where do you want to head next on our journey?
Now, I'm like torn among like 5 things. You choose. You always choose better than I do.
Since we have a double offenders in this category in the movers shakers this week, including a sector as well, I think we got to head out to energy next.
It's time to tap into the deep options well of black gold, Texas tea, natgas, and more. It's time to talk energy.
All right, listeners, to the topsy-turvy world of energy we go. A little bit of topsy, a little bit of turvy going up out there this week. You know where to go to find all this fun for yourselves, listeners. Go into that drop down. You're going to pop out of rates, you're going to go up 3 slots to energy. Then in product family, you got your pick of poisons out there. I think we're going to start in natgas first. It is one of our frequent offenders after all. So go to the top of that product family, you see natgas, and it'll come up for you. A decently active week, right about what we expect. We usually expect somewhere around 400,000 contracts, and that's pretty much exactly what we have, 399,000 contracts. Funny how that works out there, listeners. natgas threatening a 3 handle. So we had Carly on the show not too long ago talking about some upside out here in natgas. Seems like that is coming to pass. She also was talking about triple-digit WTI. We'll get to WTI maybe in a minute as well, see how that prediction is working out. 294 right now in natgas, up a little over 6, almost 7 cents on the week, or about 2.3%. Of course, if you fast forward back to the end of our show last week, it was up about 3.25%, so a little bit larger move on the week. Mr. Rhoads, anything catching your eye out there in the wonderful world of natgas this week?
It looks like the calls are bid. Am I seeing this correct?
That does appear to be the case.
We always take a look at the skew, and it's very blatant that the concern most definitely seems to be around an upside move. Maybe that's because how much? Well, they can go negative. We did learn that once.
We all learned that.
I was getting ready to say, how much lower can they go from 3? Well, we saw that happen once, but just because we're at much, much lower levels, maybe seasonally as well. It's just it just looks very dramatic with respect to call implied vol versus put implied vol, and trading activity for the most part as well, I think.
Yeah, that's kind of been. Good.
No, I was going to say it looked like a couple of 4.5 calls in the next December and January expiration. It's a 50% move in natural gas, isn't it? Which can happen in a day.
Yeah, it depends what Putin's up to, how quickly we get there, right? But yeah, we have been talking about that seasonal bid in natgas for a while, and that's really where it's starting to kick in. If you look at the November contract right now, listeners, and not much of a bid. That future at about 295. We're seeing about a 3.4% bid to the calls, about a 2% discount to the puts. So not a ton of craziness there, even though that is where the lion's share of the action went up this week, 57.2%. So we will be hanging out there. But to the once and future Dr. Vix's point, and we have mentioned this on the show before, once you get a little bit farther out, you get past December into January, you get into the teeth of winter, you get into the seasonally strongest months for natgas. That's where you see some aggressive bids to the upside. You see a 7.5% bid in the D's contract, 9% in January, 10.5% out in February, and about almost 11% in March. Then, of course, it drops off a cliff again in April, pretty much flat. So that seasonality very much at play there. But if you're looking for names, we were talking about soybeans on the show a few weeks ago, names that are set up to be collar friendly, shall we say, with a discount to the puts, a nice aggressive bid to the calls. You could do worse than, let's say, Feb natgas, 8% discount to the puts, 10.5% bid to the calls. Put on a collar, get some nice tight protection for not much money. Sell the calls a decent way out, give yourself some room to run, and probably do it for even money, maybe even a credit. So there are intriguing things about that setup. But let's look at the paper right now, listeners. It is the 2.5 puts going up in November that are leading the dance. By the way, November, like I said, the most active contract. The vol out there, about a 60. So kind of treading water. We've been hanging out around this 60 level for a while. Not a huge vol mover this week. And the skew, like I said, also in November, not reflecting much. About 3.5% bid of the calls. So slight bid to the upside, but nothing crazy. But it was the puts leading the dance this week, though. 2.5 puts in November, doing about 24,000 contracts. The big day yesterday, 8,000. 6,000 on Tuesday, 6,000 as well today, and about 3,500 on Monday. Looks like opening all week long, and today, who knows? There's 43,000 contracts open on this strike, so today's 6,000 lot, like spitting into the wind, but someone could be taking some of that off. And then we go down to the 2/4 puts, so 2 half puts not doing it for you. Allow me to present the 2.25 puts, 21,000 of those. The big day for those, also Wednesday, 11,000 going up there, mostly closing there, so maybe we've got some folks rolling up on the 2/4 puts up to the 2.5 puts. That would make some sense, even though they are doing smaller size on the second leg. So that would usually indicate maybe they haven't fared so well on these puts. And again, we haven't moved away from these puts. So if they bought 2/4 puts, probably not making a ton of money on those. Hence the smaller size on the second leg, if that was a roll. And then 4,800 on Tuesday, 3,800 today, 1,200 on Monday. again, opening earlier in the week, closing on Wednesday. Let's scroll around a little bit because it is a lot of near-dated paper. 15,000 of the threes. So if you did want some upside, the threes and the 3/2 both doing about 15,000 contracts this week. Some days look like they're lining up close to verticals, like today. The threes doing 5,300 contracts today. The 3/2 doing 6,000 today. So maybe some vertical action could be just some everyone buying all the upside they can action as well. Because it looks like we were mostly opening on both legs. At least on Monday we were. A little bit more scattered paper the other days of the week. But intriguing stuff out here. Mr. Rhoads, aside from that bid we're seeing in the call wing going out to Q1, early Q2 of next year, anything else catching your eye in the world of natgas, sir?
I've been going through expirations and going farther and farther out to see if there's any option activity that looks like it's not overly bullish, and I can't find it. How's that for a non-answer there?
There we go.
Like I was going farther and farther out with expirations while you were talking about how it looks like the skew is bid to the upside out into the first and second quarter next year. Yeah, it is. And if anything, it looks like it's most dramatic, I would say, like in the January to February timeframe next year, which again is very seasonal. There'll be very cold weather in Europe, and people will be calling up Moscow, and Putin will be sitting there looking like Mr. Burns, saying, I hope they freeze their off. All being all evil and cutting everybody off.
Is that your Mr. Burns or your Putin impression? A little bit of both.
It was kind of a combination of both.
It was
terrible.
Any other interesting nuggets coming from your so pricey Bloomberg, sir?
No, nothing terribly exciting. In fact, I mean, that implied vol in the 60s is really kind of tame relative to history for nat gas, if I remember correctly.
Yes, we have flirted with triple digits in the past. Yes. So
that's where we need the daily options.
Yes, as opposed to the 30-year. Let's get some natgas dailies out there. So, yeah, we're working on it, listeners. Not quite there yet. Since we're also seeing a lot of movement in the crude side, let's hang out there really quickly as well. Pop out of that product family and go up one from natgas to crude oil, listeners. Hang out in WTI. Pretty robust week volume-wise out in WTI. 650,000. That's roughly 200, maybe 250,000 contracts more than we're used to seeing out here in a given week. So a pretty action-packed week. Some of that probably having to do with the fact that we are inching towards that triple-digit level. Again, not to toot her horn too much, but Carly did call for that, so she was on the right tip, at least so far. Almost a 92 right now in WTI. 91.70, up about $1.70 or nearly 2% on the week. And again, an action-packed week, and of that, 41%, so a significant chunk going up here in the November contract that has about 19 days to go. Now, unlike natgas, there are some dailies here. There's stuff expiring tomorrow, and they did about 5.5% of the paper. Stuff expiring in 4 days, doing about 0.4%. So there are more near-dated contracts available in WTI. It seems like right now people still preferring a little bit of the longer dated. I say longer dated in air quotes because it's only a little over 2 weeks, but compared to the equity paper, that's an eternity. But that's where we're hanging out right now in WTI. What's the vol in WTI? Starting to get a little bit frothier again. 31 3/4, up about 3.5 points out there this week. Skew-wise, out in November, the puts 1.2% bid last week. As we creep up a little bit, those puts getting a little bit juicier, 4.2% bid. So maybe some folks thinking we're getting a little bit overdone here. It also happens naturally as you move up the skew curve, listeners. It tends to rotate around the at-the-money, and those out-of-the-money puts can get a little bit juicier there as well. So maybe a combination of the two. The calls, though, not really showing much of evolution. They were about 1% bid last week. They're slightly discounted now, 1.4% cheap. So coming in a little bit, but not an enormous change out there. No one's crushing all the calls to high heaven or anything along those lines. So this skew maybe showing we're hitting an equilibrium for right now, or maybe showing a little bit of bias to the downside. In terms of action, it was the par calls, which I guess really shouldn't surprise me. That is the psychologically important level everyone's kind of fixated on. Par calls going up 28,000 times this week in November. The big day yesterday, 13,000. Looks like mostly closing. And then about 10,000 today, 4,000 on Tuesday, also closing there, and 1,200 on Monday. Also worth noting, the pars in Dees also going up about 26,000 times. So maybe, it looks like they're all opening there. 11,000 today, 8,600 on Wednesday, 4,000 on Tuesday, 1,000 on Monday. So if I had to wager, it looks like some folks rolling the Nove out to December there because the paper lines up size-wise and day-wise, and they are closing mostly in November and opening in December. So if it looks like a duck and it quacks like a duck, chances are, listeners, it's probably a duck. Mr. Rhoads, is that your takeaway as well out there? They're probably rolling. And anything else catching your eye out there in the Texas T this week as we inch inexorably towards the par strike, sir?
Yeah, it feels like the enthusiasm around running to 100 is waning a bit. But I was looking at the open interest for the 100 strikes and beyond. There's easily a couple 100,000 contracts open right now on the call side with a strike price of 100 or higher. So some people are speculating on it at some time. You can't assume that all of those were people selling. But it does look like the enthusiasm was there a week or two ago. Maybe it's waning a bit. But I was talking to a very seasoned commodity guy about his systems and stuff and how he developed them. And when I say seasoned, that means they're older than I am. And one of the things he said was he used to have these great signals, but he always realized that there was somewhat of a delay. And his delay on crude oil was usually somewhere between 15 and 20 days. So like he would see a good signal for bullish, and then it took sometimes almost a month for crude oil to do its thing. Maybe that's who was rolling their 100 calls out for one more month, thinking that they've just been a bit too early. I think Carly was a bit early, and sometimes it's when people start to throw in the towel on a call like that all of a sudden it does happen. So I'm still betting on Carly. Carly, 2024, oil to 100.
That's a rough indicator. A 2-week lag time. That's makes it challenging, I would think, to utilize that.
Yeah, I just nodded a lot.
Hey, he's still around, I guess, so he must be doing something right. But you know what's still going, listeners, is this show, and we are joined, of course, by the once and future Dr. Vic. So we got to squeeze in a little bit of the old equities next.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, welcome to the world of equities. And you know, equities sneaking onto our movers and shakers quite a bit this week. We had 3, in fact. We had the energy sector, the utilities sector, and the real estate sector. So equities well represented, even if it's just the components, it's not the full indexes out there. Of course, if you want to see this paper for yourselves, listeners, pop into those drop down, go out of energy and go down 1 to equity indexes. And where we hang our hats from there is anyone's guess. Before we do that, let's break down the vol setups right now. VIX hanging out fairly frothy, especially compared to where it was a week or two ago. A little bit north of 17.5 right now, up about 1.5 points from where it was, almost 1.6 points from where it was this time last week. VVIX, so the volatility of vol itself, at about a 95, up about 5 2/3 points, and vol Q at about a 2040, up about exactly a point from where it was this time last week. Of course, we have retreated off the highs for vol, which came a few sessions ago as we were seeing just aggressive sell-offs in the equity market. That reversing a little bit today, some of that vol coming in, but still frothy, still juicy compared to where it was a week ago. That also puts that VIX to vol Q spread at about 2.8 points, which is coming in a little bit. Remember, I was remarking on not too long ago, it was around 3.5 points, which is actually fairly wide for that spread. So not surprising to see that come in about 0.6 of a point this week. Mr. Rhoads, a.k.a. Mr. Once and Future Dr. Vix, what is catching your eye out there in the world of vol and indeed the broad equity market these days, sir?
Well, the broad equity market, I feel like I'm you're having me on so much now, I'm starting to feel like a broken record. But it's not option oriented, but I'm still sticking to my guns with long the Russell 2000 and short the S&P 500 into the end of the year. I wrote it up over the weekend and I didn't mention any way to play it with options. I really couldn't come up with a good way to play it with options because we're looking at the difference between the two, which doesn't mean I'm necessarily bullish or bearish on either one. I just think the S&P will underperform the Russell 2000 for the rest of the year. Anybody's got an option trading idea around that?
Looks like we lost you. Were you there, sir?
there?
Yeah,
you got me?
We lost you right towards the end. You're about to say if anyone has an idea, and then you went rogue.
Let me know. I just said let me know. Basically, in a nutshell, please let me know. Because I'd love to come up with a way to apply options. All I could come up with was the micro futures, the regular futures, and the ETFs.
Well, let's get out there, shall we, and see what we've got cooking in the realm of the old stalwart, the old standby. S&P looking robust this week. All it took was a little bit of red, listeners, to get some volume back on the tape. We usually do around 2.8, maybe a little over 3 million. This week, 4.6 million contracts on the tape. So this little bit of red on the screen is really driving some paper out there, listeners. We're hanging out right around the 4,300 level, looks like, as we've been vacillating around that for a little bit now, managing to hang out above it right now, but get, of course, dipping below it earlier in the week. You know the drill by now. I won't regale you with how exactly 50% of the paper is expiring in 24 hours. We have 21% going away in a few minutes, 29% going away tomorrow. So again, that's 50% right there. You go out to 4 days, you're already at 55%. It's so much paper in this stuff, listeners. It is almost getting hard to process. That said, it's interesting to see some of this near-dated stuff, the actually, dare I say it, relevant stuff, is starting to at least compete with the nonsense. And by that, I mean the big dog out here in the E-mini on this crazy week are still the 3675 puts. Someone blasting away at those 111,000 times. So we continue to pick up the nickels in front of the steamroller. But once you start filtering that nonsense out of the equation, you still do see some impressive paper in the relevant strikes in the 0-day stuff. What do I mean? Well, how about the 42 half puts going out tomorrow, listeners? Just lighting up the tape this week. Of course, we threatened that strike intra-week, now moving away from it. So a lot of action to be had there. The big day for these was actually Monday, 38,000 on Monday, and then 28,000 on Wednesday, 16,000 Tuesday, 18,000 today. There are still about 36,000 contracts open on the strike, so today's paper, kind of anyone's guess. Could be closing, could be adding more on as we continue to move away from that strike. Probably a little bit of closing, but you never know. Time will tell out there, listeners. And then right behind it, we have, again, more of the garbage nonsense puts, 36 half puts going up 70,000 times. So we'll scroll away from those. Then we drop down quite a bit to, let's say, the 4,300 puts expiring in a few minutes. I thought this would be the volume leader this week because that is such a psychologically important and just pivotal level. Yet only 34,000 contracts, actually 33,000, and 20,000 of that going up today. So that makes some sense. As we're kind of breaking through that strike again, we see that one come back on the radar. So 21,000 of the 32,000, 4,300 puts that are expiring tomorrow went up today, a few thousand scattered throughout the rest of the week. So intriguing stuff. Obviously, today's paper is opening because only 1,500 contracts were open coming into this morning. So size opening paper on the 4,300 puts. I expected that, but probably a little bit more size. If anything, that kind of surprises me that they're not dominating the tape a little bit more. If we go out a whopping 8 days, listeners, you can find the 4,200 puts going up about 30,000 times this week. Pretty evenly all week long, 8,000 to 9,500 contracts with the exception of Monday, about 2,800 on Monday. Everything else pretty robust throughout the week. And again, only about 5,500 contracts open. So it seems like a lot of back and forth paper on that strike throughout the week because you saw a lot of volume and only 5,500 contracts. So folks open on the 4,200 puts as we got closer, maybe closing as we get away from it, even though it looks like opening paper throughout the week. Today's paper clearly opening as well. So a lot of action on these 4,200 puts. Mr. Rhoads, anything catching your eye out here in the absolute tsunami of paper that was the E-mini S&P 500 this week, sir?
The 4,200 level, which is one of the major moving averages right now, but also did you read the article about the JP Morgan fund that has a whole lot of those puts open for it's one of the systematic mutual funds they run?
Rolling Friends.
Yeah, but the thing is they buy out of the money puts for a collar.
Oh, there you go. Are you there again?
Well, my internet keeps dropping. Hold on. Can you hear me now?
Yeah.
Can you hear me now?
I can hear you now.
All right, I closed my Bloomberg because it takes up too much. So now I've got nothing to say because I don't have anything to refer to.
You said they bought collars, and then we lost you. So they bought collars.
Okay, there was an article, I think, on Bloomberg yesterday by the new option reporter, and they were talking about how there's a big open interest for the month-end options in a JP Morgan mutual fund. It's the 4210s, actually. And and they didn't fully explain why that's significant, but what they did say was they were talking about the market makers and how they've got to keep, if they're on the other side of that trade, which they most likely are, as we approach that 4,200 level, especially with expiration tomorrow, that it could be as much as a magnet for the overall S&P 500 over the short term. Because if we come in and the market maker let's just say it's one market maker on the other side of that trade, if they are neutral, overnight, and then we come in and the S&P is down 1 or 2%, they got to sell futures to go back to being delta neutral. And we could have a really fun, volatile day tomorrow going into the close if that 4,200 level is in play. Also, and this is something I haven't been able to dig on, but they did quote someone that said since this fund got so large that the month-end price activity when they have to roll their trade has been an extra volatile day. So if you're thinking about taking tomorrow off, don't take tomorrow off. It might be a fun day.
Yeah, we were talking to the Flowmaster on our Option Block show earlier today, and he said the same thing. There's a lot of paper potentially in play tomorrow, so something to watch. Speaking of paper, sir, I haven't had a chance to chat with you about this new zero-day ETF that's writing puts in the NASDAQ, this QQQY. Have you seen this, sir? What are your thoughts?
I have not seen that one yet. I heard of it, but I had not seen it yet. It'll be interesting to see if it gets to be too big.
Yeah, could be very popular.
Yeah.
Of course,
that's my biggest concern with any of those is, and I assume they're using the Qs and not the NASDAQ, and not the NDX, which is a fairly liquid market. But if people, if somebody's going to trade, they got to trade. People try to take advantage of that.
That does open up certain opportunities for folks out there, yes. But yeah, they're selling, I'm not sure exactly what percent out of the money, but they are selling out of the money zero-day puts in the NASDAQ. They're going to launch one in the S&P 500 and the Russell as well. So yeah, should be interesting. If we get some aggressive down days, maybe some of these aggressive whipsaw days, maybe not so fun in that one. But we shall keep an eye on that. I mean, it makes sense. This is the hot trend. I'm surprised it took this long for someone to try to tap into it. Are you intrigued by these zero-day ETFs? You want someone else to do your zero DTE option writing for you? Listeners, hit us up. Let us know. Speaking of your thoughts, listeners, it's time to get to them. A little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, listeners, welcome to your feedback segment. You folks know how to get a hold of us at Options on most major social media platforms. Questions at theoptionsinsider.com also works. Of course, if you're in the pro, listening live, you can put those questions in there as well, or via your members hotline, always bumped to the top of the list. But speaking of social media, we like to get your pulse, get your sentiment in the market, and this is the perfect time to do just that, listeners, because we are, of course, talking about some topsy-turvy markets. So once again, we are polling you folks, the ultimate arbiters of all things markets, for how you're feeling right now, quite frankly. Are you comfortable with these markets? Maybe not so comfortable. Quite simply, we said we've seen a little red on the screen lately, so where are you comfortable buying into, or if you have some already, buying more SPX right now. Gave you, it could be, doesn't have to be SPX, could be SPY, could be the mini. Pick your flavor of the S&P 500. We don't care, but the same relative levels all apply. We gave you right around here, so where we are right now, also where we were when we posted this earlier this week. So right around the 4,300 to 43.5 level. Or you're not comfortable till it gets a little bit lower, let's say below 4,200. Or you want it to drop even lower, below 4,000 before you're willing to buy in. Or you're feeling your dark side oats. You want it to drop below the lows set last year, so below the 3,600 level in the S&P. Mr. Rhoads, you kind of gave us your thoughts, but if you have additional thoughts on levels you're comfortable with, have at it. And then B, more importantly, where do you think our audience is comfortable buying back in?
My comfort level is lower. I'm around 3,800.
Interesting. So you closed your shorts, but you're still feeling bearish.
I hope we don't get there, but that's the that's the price level that I'm looking at where I'll stop shorting. How's that? So that I don't I feel like if you did that same survey, if you did a 24-hour survey, 5 different days, I think it would be very market dependent.
Oh yes.
So I'm gonna say people are on the lower end as well, just because we've had such a couple of lousy days.
So your level, the 3,600 level and below?
Well, I'm thinking 38.
That's not a poll.
I think your people would be about the same.
Okay, so they're going to say even lower than below 4,000. How about that? I'll put you down for that.
Yeah.
And right now, our audience, they're not as characteristically bearish as they usually are, Mr. Rhoads. They're saying just a little bit lower, 42.1%, saying if it drops below 4,200, they're okay taking a nibble. And then right behind that, 24, almost 25% are in the cataclysmically lower level that you're in, or you're almost in. And then we just had our buddy, Mr. Matt from Rhoads, on the show yesterday. He's in the 3,000 before 5,000 camp, so he's feeling very bearish. A lot of our audience clearly is as well, 25% almost, saying below 3,600 is where they're comfortable buying back in. And then 19% saying even lower, so a little bit below 4,000 is where you're comfortable. And then 14% saying right here is just fine for me, between 4,300 and 43.5. Have thoughts, agree, disagree, at options, your place to go. This vanishes in about a day, listeners. So get out there and make your voice heard. All right, Mr. Rhoads, unfortunately, that music means we have come to the end of another epic sojourn through the world of futures options. Hit on a bunch of fun stuff today. Hit on a bunch of rates, a bunch of energy, tickled a little bit of the old equities, and of course, got your folks' thoughts on your outlook for a little bit of equity sentiment. But before we go, Mr. Rhoads, if folks are intrigued, maybe they want to check out your Substack or any of your interesting research, where should they go? What should they do?
Anything I do, I always put it out on Twitter, and my Twitter handle is my full name, Russell Rhoads. If you follow the Options Insider on Twitter, you'll see that I've been tagged multiple times today as we've been going through this program. So that's the easiest way to find me. And then I have a Substack as well, my full name, .substack.com. Been doing a lot of consulting. I got to come up with a cool name for a consulting firm. So anybody gives me one of those, comes up with a cool name, I'll give you a book.
Once and future Dr. Vic's Consulting. How's that?
I could look up, doctor. All I've been doing is looking up the Latin version of a lot of words.
Well, there you go. That sounds like a fun time to be had by all. In the meantime, listeners, if you want a fun time, give him a follow. At Russell Rhoads, 2 S's, 2 L's, RHOADS on the old Twitter. And, of course, you know where to go to find all of this fun we talked about today and a whole bunch more. CMEgroup.com/TWIFO, TWIFO, the place to go to kick the tires and light the fires. Once you're there, you can check these reports whenever your heart desires. Could be 2 a.m. on a Saturday. We won't judge. CMEgroup.com/TWIFO is the place to go. We got to get on out of here. That's going to do it for the network today. Back again tomorrow, noon Central, 1 p.m. Eastern. And then, of course, after that, exclusively for you pro folks over there, 2 p.m. Central, 3 p.m. Eastern with a little bit of the old options oddities. Then back again on Monday for the old option block all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.